Welcome back, everyone, and good morning to you, ladies and gentlemen. I'm so excited to be here with you this morning after a very wonderful 24 hours. Um, I would like to appreciate if you, I would appreciate if you would confirm that the audio quality is right. So I had to do some adjustments again to make sure that we have a better experience out there. So please let me know if there are any issues in the audio quality and the visuals too, as well, as this will help me to make our experience out here very pleasant for every one of us. So thank you very much as you do so. So welcome everyone to another promising session, and we are going to be, as usual, diving into an exciting and insightful analysis of the handful of financial instrument on our watch list. So we have the USDJPY, we have the XAUUSD, we also have the USOilSPOT and the GBPUSD, and in fact we have been doing quite well. At least so far this week, we have been doing very well. So we are going to be looking at how well we have done. We are going to be reviewing the market structure using price action based technical analysis, and also try to position ourselves appropriately ahead of the London and the New York session today. And we're also going to see how we are going to be managing our existing trade as well, while we look out for more opportunities on all of these pairs. And we'll go further to uncover key insights that can potentially shape our trading decisions for today. And for those who are joining us for the first time, our purpose here is to come together as a community, gathering in anticipation of both the New York and London trading session. And during this time, we will review and manage our current position, while we also aim to position ourselves strategically for today's trading session. So I basically focus on the 1 hour time frame during the live session. So I have done a top-down analysis during the course of the weekend, so that you can understand how we got to the current structure we are using on the 1 hour time frame. So if you do want to watch those videos, I have the link right in the description box of this current video you are watching, so that you can be up to date with us, and it will also help you to be able to make your independent decisions on this instrument. So I have it timestamped so you can easily navigate to whichever aspect of the video is of your interest. So welcome once again, guys. I can see some comments in the comment section. Adriano Albanese, good morning to you. Streamer updating everything in TradingView. Oh, I'm very glad that you find them very useful. Thank you very much for your good compliments. Thank you. And thank you for the feedback. I really do appreciate that. Dominion Site Office, good morning to you. I'm glad to have you around once again. Trust you are doing well. I'm fine, thank you over here. So I'm glad to have you around. So with that being said, here we are going to be diving right into the business for today. And you know how we do it. The first thing we are going to be doing is to try to keep tabs with the fundamental factors in the market by checking the economic calendar. And you know how important I reiterate the necessity to do this, as these fundamental factors, as you can see what happened yesterday, often manifest on the chart as technical patterns and price movement. And by monitoring the economic calendar, we can identify potential correlations between the key economic releases and special technical patterns ahead of both the London and the New York session. And we have been doing that very well, making use of this for our better timing and positioning ourselves in such a way that we can catch potential trading opportunities. So diving into the economic calendar for today, and you know how we do it, we normally focus on high impact events that will be affecting any of the currency in our watch list, and these are the US dollar, the Japanese yen, and the pound sterling. And for today, June 15th, Thursday, I think, yes, am I correct? Okay, so looking at what we have here, we have only two high impact event which is coming in from the US economic docket. So we have the retail sales, and the retail sales is released by the US Census Bureau, and it normally gives us data that measures the total receipts of retail stores. So monthly percent changes reflect the rate of changes in such sales. And this is widely followed as an indicator of consumer spending. So what this means is that a high reading is something seen as positive for the US dollar, while a low reading is seen as a negative influence on the US dollar. And if you look at the previous data we have here under the retail sales month-on-month index, you will see that the previous data, that is for the month of April, came in 0.4%, which was a little bit on a positive side. But from the general consensus here, economists are projecting a minus 0.1%, which is a little bit negative. It's a negative. It shows that there is a contraction in the economy as consumer spending appeared to have reduced based on the general consensus. So we are going to be waiting for the actual data, which will be coming in about 4 hours from now, to see what is really going to be. Is it going to be just as expected, below expectation, or beyond expectation? Then we also have the retail sales group month. It's published by the US Bureau as well, and it represents the total industry sales that are used to prepare the estimate of PCE for most goods. And the previous data also came in at 0.7%, as against the general consensus here, which has projected a 0.0% index. So we are going to be looking forward to what data is going to be like. Will it be just as expected, below expectation, or even beyond expectation? And you know how we do it. We want to ensure that we are able to identify a simple structure that would evolve prior to this event, so that we can position ourselves in such a way that we can catch any potential trading opportunities prior to this event, even during the event and post the event. So that is all for today on the economic calendar. So besides the two events coming in from the US economic docket, there are no other high impact events affecting the currency pairs or commodities that we are monitoring this week. So on that note, I will be diving right into the chart. And so let's kickstart the session with our usual, which is the USOilSPOT. So on the USOilSPOT, we had a very interesting situation during the last 24 hours where we saw our price action broke down that bullish trend line we identified yesterday to signal a potential bearish opportunities to the downside. So looking at what we have here, hold on a second, let's run through the initial position we had at the beginning of the week and what we were looking at that was guiding our trading activity throughout the course of the week. So at the beginning of this week, we identified a flat channel, which was what we were using to guide our trading activity. And this was where price action was ranging between the $70.10 level and the $69.30 area to give us a simple structure to work with for the week. And you know how we do it whenever we have this kind of simple setup. We are going to be waiting for price action patiently to either give us a signal, either in the form of a breakout of the resistance line of that flat channel or the breakdown of the support line of the flat channel. And as you can see, prior to the beginning of our live session on Monday, we already saw the breakdown of structure, which signaled that price action is likely going to be going to the downside. And when we identified this during the live session, I told us all that for those who had missed out on this opportunity, that we want to remain patient and wait for new structures to mature before we want to be joining any momentum to either weigh on this chart. And one of the key parameters that we identified here to help us guide that trading activity on Monday was this bearish trend line after we connected the series of lower highs. And if you look at what happened here on Monday, this trend line was a major assistance in helping us to guide our bearish momentum to the downside. So what we did here to make things a little bit more easy for us is to scale down into the 50 minutes time frame, where we identified two key parameters that we said we are going to be using to guide our bearish momentum for Monday. So we saw the trend line here. So we had this trend line figured out. That was the first one, where we said if price action breaks down, retests the trend line, we are going to be selling the USOilSPOT. Then we also had a key level situated at the $68.60 level, as you can see here. We had a sell stop order below that structure, and as you can see, price action broke through that structure, giving us our first sell position for the week. And in fact, we rode the move all the way to the downside, giving us over 170 pips on that first position. And we also added more position at the breakdown of the $67.80 level, which also gave us about 90 pips in profit. So as at the beginning of the week, we were already about 250 pips in profit. So we were already cruising at the beginning of the week on the USOilSPOT. Then on Tuesday, we identified a demand zone around the $67 level, where we saw how it was difficult for sellers to break through the structure. We saw the first attempt here, which failed. Then we saw the second attempt here, which also failed. And this gave us an insight into the potentials of the buyers around that area. And what we simply did here when we looked at the structure was to identify higher lows on this chart. And using the higher lows here, we connected it to give us a trend line to work with. And it was on Tuesday we decided that as long as price action remains above this trend line, we shall be looking out for buying opportunity and also feel comfortable in any buy position we have, while we also look out for more opportunity to maximize the potential of this move. And on that same day, we acknowledge that if price action breaks out to retest the $67.80 level, we are going to be into buy the USOilSPOT, which happened actually, and price action since then had moved significantly well in our favor. As you can see here, we saw our price action. How many pips was that? It moved over 280 pips on that one. Then we also decided to add more position if price action breaks out of the $68.63 level. So we had a buy stop order there too to maximize the potential of this bullish move. And we saw our price action moved over 200 pips on that one. So on the third day of this week, we were already in a massive profit of over 500 pips on the USOilSPOT. No stop losses at all, no choppy situations that could take us out of our position. It was just a situation where we were seeing higher highs and higher lows. And for those who have been part of this profitable journey, well done to you for being on standby to catch that move, as right now you will be definitely in profit at this point. So moving on now to yesterday's trading session, we were able to identify simple setups that we are going to be using to guide our trading activity. So during our live session yesterday, we acknowledged this trend line, which has been guiding the bullish momentum yesterday. Since the beginning of the week. And what we said here is that we are going to be using it to guide our moves. That is, if price action remains above that trend line, we still feel comfortable in the buy position. And during our live session yesterday, we were around here. This was where we were during the live session yesterday. And we said something here that price action was currently trading above that zone we identified at the beginning of the week. Remember, this was the zone we identified where price action was initially ranging, and we saw the breakout of that structure yesterday. I told us all to move our stop losses to secure the buy position while we wait out for more opportunities. But I made mention of something yesterday that if price action fails to find buying pressure to break out the $70.65 level, we could likely see a bearish move. And if price action drops, I made mention of that, and if price action drops, then we want to see how price action will be reacting to this trend line, which also shares a confluence with the support line of that range at the $69.30 level. So we said a breakdown retest will definitely signal an opportunity to buy the US All Spot. And this was exactly what happened. We saw the breakdown retest of structure, and in fact, price action moved over 100 pips in our favor during the New York session yesterday, and I do hope that you moved your stop loss accordingly to lock in some profit. You know how we do it here. When price action moves significantly well in our favor, we want to move our stop losses either to break even or to a modest amount of pips so that we can secure that position just in case price action moves against us and take us out of our position. So we will not be taken out in a loss, but instead the worst case scenario, break even. So that is what we saw here yesterday. So it has been a very profitable journey for us on the US All Spot so far this week. So I shared a commentary this morning on my TradingView platform and of course my Telegram platform as well, where let's look at a commentary this morning on the US All Spot. So I'm trying to load up my commentary section. Okay, so as at this morning, so this was how we were managing our trade yesterday as regards to the US All Spot. So after the FOMC, we saw our sell stop triggered. I told us all to secure our sell position, as you can see here. And I made a notice here yesterday, a public notice. I said, if you are taking out of any of the existing positions in our portfolio, it is recommended to refrain from opening new position at this time. Because of the volatility from the FOMC, it's not reasonable to open new position at that point. We want to allow the current position to run through. So I said our current strategy involves waiting for the market influx to stabilize, allowing market participants to evaluate the consequences of the unchanged interest rate decision before making any further trading decisions. And this was my commentary here this morning. I said secure sell positions as buy pressure resumes around this area. So I do hope you've secured your sell position at this point. So let's see how we are going to be getting ready for both the London and New York session today on the US oil commodity chart. So right here on the US oil, we can see that price action has finally broken down this bullish trend line. So will this breakdown persist? That is, we will see, are we going to continue seeing price action below this trend line going forward? Well, we have key levels that we have identified on this chart that we are going to be using to guide our trading activity for today. Now, the first thing I observed on this chart after monitoring how price action has been playing out on this market structure since the later part of the New York session yesterday, the first thing I observed here was this buy pressure around the $68 area. You will see that as soon as price action got into this level, sellers found it difficult to break through the structure, and which from a psychological standpoint, it is a sign that buyers are still very strong around this level. We saw the first attempt here during the later part of the New York session, which failed. Then we saw another one around here during the early hours of today, which also failed at this point. And with this kind of situation, there is a likelihood that buyers could gain a momentum that could spiral all the way to the upside. So at this point in time, it is quite reasonable that we look out for buying opportunity as long as price action remains above the $68 level. Now, if you look at this closely, looking at it a little bit further, you will notice that price action appears to be transitioning into what seems to be a reversal pattern in the form of a double bottom structure. Now, if we take into consideration this impulsive move that started here yesterday, all the way to the downside, we saw the first touch of the $68 level. Price came back into the $68.60 area, and price action was unable to break the previous low, which is a sign that buyers are gradually gaining momentum behind the scenes. And if price comes back into this area, then definitely it's looking more like a reversal pattern. And immediately we identify a potential reversal pattern, the next thing we want to be doing here is to identify the potential neckline of that reversal pattern, which obviously is going to be a platform that we are going to be using to confirm the validity and potency of that reversal pattern. Now, the neckline of that reversal pattern falls exactly along that $68.60 level, which we are going to be using to guide our trading activity today. And what this simply means is that if price action breaks out, retest this level, we want to be in for a buy position in this market. So let's see how price action will react to the $68.60 level here, though we have been seeing signs that buyers are trying to break through that structure. So I would want to see price action break out, something like this on my lower time frame, like a breakout of structure. Then I want to see something like a retest, signs that buyers are finding it difficult to signs that sellers are finding it difficult to drop below the $68.60 level. Then at this point, we want to consider buying the US oil spot. Then we want to be adding more position at the breakout of the $69.28 level to maximize the potential of this move. So that is how we are going to be buying the US oil spot today. So let's remain patient and wait for this candle that is currently running right now. I think it still has about 24 minutes to go on this one. So we are going to wait and see how price action will be reacting to this level to decide what our next line of action will be. And trust me, I'm going to be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. Now, in as much as we're looking out for opportunities to buy here, you know how we do it. We always want to keep all our options open so that if anything different from what we have decided to do here happens, we also want to be on standby to catch it. So in as much as we are looking out for buying opportunities, we cannot ignore the potentials the sellers too have in this market. And considering the fact that price action was strongly bearish yesterday, there is a chance that sellers could still come in to this market. Now, what do we want to see on this chart that will make us change our buyers from bullish to bearish? Well, personally, based on the $68 area, which has been negating sellers' attempts in this market in the last, let's say, the last 15 hours now, I'm of the opinion that we want to see price action break down that $68 area for us to start considering joining a trend continuation to the downside. So I want to see price action take out all the buy positions along this area, and if possible, reveal some level of liquidity for selling momentum, which would reflect on the chart as a retest of structure. On our lower time frame, look out for selling pressure, after which we want to be part of a bearish move to the downside. So that is the only way I will be selling from this current juncture in this market. But trust me, I will be with you right in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So if you have any questions regarding what I just explained so far, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So that is that on the US oil spot for today. I hope I made myself clear, and if you need further clarifications, let me know in the comment section. So I will be giving some time to see if there will be any comments before I move on to the next instrument. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So let's remain patient for structures to mature on the US oil spot. So moving on right now, we are going to be going into the GBPUSD chart to see what has really been going on in this market in the last in the last 4 days. And let's see how we can maximize the potentials of any opportunities in this market. So right here, we're on the 1 hour time frame GBPUSD chart. And well, the first thing we observed at the beginning of the week, it has been quite an interesting experience. It was a roller coaster of buys and sells on the GBPUSD since the beginning of the week. And we had, at the beginning of the week, we sold. And during the later part of the week, we started buying the GBPUSD. So let's look at what really guided the idea of buying or selling in this market. So at the beginning of the week, we acknowledged a key level at the 1.2590 level, which was very, very important. So if you want to understand how we got to identify this key level, I would advise that you watch my video on the GBPUSD, which is right in the description box of this current video. So I did a top-down analysis on how we are going to be projecting trading opportunities ahead of this current week we are in. So you might want to watch it after the live session. So we had a key level at the 1.25900 level here, where we were using it to guide our trading activity for this week. And you know how we use our key level in this community. If price action breaks above our key level, we definitely want to be looking out for patterns and structures that will be supporting buying opportunities. But if price action drops below our key level, we want to be looking out for patterns and structures that will support selling opportunities in this market. Now, if you look at what happened during the first half of the week, you will see that price action spent most of the time right below the key level, which also prompted the idea of selling this instrument. So at the beginning of the week, we saw this channel right below the key level where price action was initially consolidating. So we saw that range, and you know how we use this whenever we want to identify trading opportunities. We wait for either a breakout of the range to happen for buying opportunity or breakdown of the range to happen for selling opportunities. And in addition to that range, there was this beautiful trend line we identified where we said it will help us to guide our trading activity. That is, if price action remains above this trend line, we shall feel comfortable buying the GBPUSD, while a breakdown of this trend line will definitely signal an opportunity to sell. And coupled with that scenario there, we scaled down into our lower time frame to find a simple setup here where we waited for a breakdown retest of this trend line to join the bearish move. And in fact, we were able to sell at that point, and we rode the move all the way to the downside. As you can see here, price action gave us over 90 pips in profit on that first position. And one interesting thing about this market is that we were able to maximize the potential of that bearish move by adding 2 more positions. So we added one here. We had a sell stop order below the 1.25650. We also added a sell stop order below the 1.25400 level to maximize that move. Let's see what happens. Okay, the second position gave us about 80 pips, and the third position gave us about 50 pips. So we were able to scoop over 200 pips on the first day on the GBPUSD. It was quite an interesting day for us here. Then we went on to start observing how the bullish momentum began in this market. And at the second day of the week, we were thinking that this bullish momentum might likely be a retracement of this bearish impulse leg that started the week. So we were anticipating that if selling pressure continues below the structure, we are going to be in to join a bearish move. But the opposite was what happened here, as we saw price action break out of the key level. And even before price action broke out of the key level on Tuesday, we already identified a channel between the 1.25770 level and the 1.25540 area where we were looking out for opportunities in the form of either a breakout or breakdown of this channel. For clarity's sake, you might want to watch my look at my commentaries on my TradingView platform on GBPUSD to see how we identify this key level prior to the execution of this position. So this was exactly what we saw on Tuesday morning, and we anticipated that if price breaks down the support line, we shall be selling, and if price breaks out of the resistant line, we will be buying. And in fact, we saw a breakout retest of that resistant line, which gave us an opportunity to buy the GBPUSD. And since then, we have been riding this move all the way to the upside, while the bullish trend line we have here continue to help us to feel comfortable in our buy position. So congrats to everyone who has been part of this buying opportunity, this profitable journey we had so far this week. Now, going into the New York and London session today, what is going to be our plans? How do we intend to trade the GBPUSD? Now, remember yesterday we saw a strong volatility in the market after the FOMC meeting, and we saw how price action dropped. Even it went to as far as breaking down that bullish trend line, which you can see here around the 1.26500 level. And the question at this point is, will this bearish engulfing candle that broke through this bullish trend line become a valid breakdown, or is it going to turn out to be a false breakdown? Now, one thing I saw here this morning, I shared it on my commentary this morning on the GBPUSD. I made mention here, hold on a second, let me upload my commentary on the GBPUSD this morning. So I shared here during this morning that after the FOMC meeting, the market volatility appears to have stabilized, and there is noticeable buying pressure around the 1.26400 level. We should remain on standby for potential buying opportunities above the 1.26500 level. However, if the market breaks down, retests the 1.262, we will consider selling opportunities too. Now, look at this chart here. This is what I was trying to say here. So I've been seeing buy pressure around this area. So let's go into the live chart so that we can see things here. So I've been seeing buy pressure around the 1.2640 area, as you can see here. Since the early hours of today, we can see our sellers were finding it difficult to break through that area, and this for me is a sign that buyers are gradually gaining momentum around that area. And with a buy stop order above the 1.2650 level, as you can see here, we already have a buy position running at this point. So with the buy position running here, well done to you for being on standby to catch this one, as I mentioned on my public platform. So we have about 20 pips running in profits at this point. So my advice right here is to move your stop losses to your entry point at this area. So around our entry point here, we should move our stop losses too. Now, the reason why I have said that we should move all our stop losses is quite simple. Now, remember we saw the breakdown of this bullish trend line here. We saw the breakdown here yesterday, and price action is gradually approaching that trend line. And from a technical standpoint, there's always this possibility that price action, once it breaks down a key level or a key structure like this, we expect it to come back, retest that structure to incite a bearish move to the downside. So because of this technical expectation, we want to be very mindful of our current buy position right now. So we want to move all stop losses to entry point, secure this position while we wait out and see how price action will be reacting to this trend line. So if it reacts to the trend line in such a way that we start seeing selling pressure around that area, then we might likely be seeing a bearish momentum throughout the second half of the week. And if price action breaks out of that trend line to the upside, then we will see a sign that buyers have finally come back to dictate the pace in this market. Then this whole breakdown here will turn out to be a false breakdown. Now, to make things a little bit easy for us to be able to capture any more trading opportunities here, I've been able to identify a level at the 1.267210 level. You want to mark this out on your chart so that it can help you to hold on a second. 1.2670710 level. Want to mark that level out on your chart. We want to see how price action will be reacting to this level to determine if we are going to be adding more buy position to our existing trade or get ready to sell. Now, if you look at that level, it shares a confluence with the trend line. That is one. It has also been a major determinant of price action in this market, at least in the last 24 hours. See how this area was a selling niche. We saw the breakdown here. We saw buy pressure here. This was a demand zone at one point. Now price action is back into that level. So we want to remain patient here. Move our stop losses. And sincerely, I want to also move my own stop loss to my entry point right now. So kindly give me a moment, please, so that I can do that. So I want to move my stop loss to my entry point at this point to secure this current position, which I also think you should also be doing right now, so that we can wait and monitor how price action will be reacting to that trend line at this point to decide what our next line of action is going to be like. So okay, so move all stop losses to that entry point, and let's wait out and see how price action will be reacting to the 1.26710 level, and how it reacts to this level will now determine if we are going to be adding more buy position at the breakout retest of that level on our lower time frame, or are we going to be getting ready to join a continued trend continuation to the downside if we continue seeing selling pressure around that area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So let's get this in mind, secure your position, and let's wait and see how this is going to play. It could take about an hour before we start seeing new structures mature on this one. So if you have any questions regarding what I just explained, feel free to let me know in the comment section. So with that being said here, I'm going to be moving on to the next instrument on our watch list, which is the XAUUSD. If you have questions, feel free to let me know in the comment section, please. So on the XAUUSD, we also had a very interesting week. We are profitable so far this week too, as well as we had some buys. We also had some sells, but majorly it was more of selling the XAUUSD throughout the course of this week. So how did the week started for us on the XAUUSD? And on this one, I would like to show you things from the 4 hours time frame. As there on the 4 hours time frame, we have a very key zone which we identified at the beginning of the week, and this zone fell around the 1960 and the 1965 area. So this was the zone we identified at the beginning of the week, and you can see how this zone had been a major determinant of price action throughout the course of the last couple of weeks. And in the last 1 week or two, we saw how that zone had been a strong selling niche. We saw it here. We saw it here throughout last week, stroke the early days of this week as well, giving us a sign that sellers could come in at any point in time. Though we were thinking of buying, actually, considering the fact that price action was sitting on a strong demand zone along the 1940, which we saw that sellers were finding it difficult to break through that structure. So we were saying that if price action breaks out of this zone here, we will be looking out for buying opportunity, which you can see, though we saw some attempt by the buyers, but every attempt here failed as we saw sellers took over the market, bringing price to the downside. And in fact, right now, we already have a breakdown of that demand zone, which is going to be the first time price action will be breaking down that zone in the last 2 to 3 weeks. And this is a sign that sellers might likely be dictating the pace going into the end of the week. So at this point, it is quite reasonable that we want to continue to look out for more selling opportunities in this market. So let's see what happened yesterday. So I had a new chart which I projected on my public platforms, where I said here, okay, this was how we took advantage of the bearish momentum yesterday. So I quickly shared something. Let me go through the XAUUSD on my public platform so that we can all see this together on how we anticipated the selling opportunity prior to the FOMC meeting. So let's look at this quickly. Where were we? Yesterday is on the 14th. So we just scroll down to on the okay, this was it here. So this was a simple setup I was able to spot here on yesterday on the 30 minutes time frame, where we saw a trend line and we saw this $1,949.50 level, where I said if price breaks out of that structure, retest it, we want to be buying the XAUUSD at that point, then had more position if we have a breakout of the 1,960. And look at what happened. We had a buy position triggered here. And so this is the fallout from our live session. And we were taken out after moved down our stop loss. So the break-even level has been reached, bringing us back to the previous state as illustrated on the chart. This opens us up to potential trading opportunities based on the provided details here. So we had a buy stop order again above the $1,949.50 level and sell stop order below the 1,940. And look at what happened here. We begin to see a consolidation phase between the 1,949 and the 1,945. So I identified a new level below the 1,945, and I said here that we should be having a sell stop order below that structure. And this was the beginning, the genesis of the bearish move that we witnessed yesterday. And look at what happened. We saw price take our buy stop order again. I told us all to move stop losses to secure position. Price action moved, favor, got into the 1,960. We started seeing selling pressure around that area. And it was at this point we decided to have a sell stop order below the $1,954.70 level for a bearish opportunity. So I said here, as we near the FOMC meeting, the failure of buyers to surpass the $1,960 level raises concern about the strength of the sellers. This situation could potentially trigger a substantial movement upon a breakout or breakdown of the range between the $1,960 and the $1,954.70. It is advised to secure or buy position as we be on standby for the trading opportunity. So look at the chart here. We had a buy stop order above the 1,960 if price action breaks out, and we had a sell stop order below the 1,954, which also shares a confluence with that bullish trend line. So you know how we do it. If the trend line is broken, then definitely we want to be looking out for selling opportunities. And at this point, we were projecting that there's going to likely be a significant move because of the volatility that comes with the FOMC's expectation. So with that situation here, we had our sell stop order triggered. We had a second one at the $1,949.50 level triggered too, as well, as we continue to maximize the potential of this bearish move. Then we also saw the $1,945.50 level triggered too as well, maximizing the potential. And I stated here yesterday as a caveat that if you are taking out of any of these existing positions, probably you moved your stop loss too close and you are taking out, that it is recommended to refrain from opening new position at this time. Our current strategy involves waiting for the market influx to stabilize, allowing market participants to evaluate the consequences of the unchanged interest rate decision before making any further decision. So that is how we enjoyed this bearish move all the way to the downside here yesterday. And this morning I said we currently have approximately 500 pips in profit across 4 sell positions. Secure those positions as we wait for new trading opportunities. So this was what I said here this morning on the XAUUSD. So right now, let's go back into the live chat and see how we intend to maximize the potentials of this move. Are we going to continue to have more opportunities to sell, or is this going to be the bus stop for sellers where buyers will take over the market and push price to the upside? Now, to guide our trading activity today, first of all, you want to be moving your stop loss right now. You remember when price action moves significantly well in our favor, we want to be moving our stop losses to secure the current sell position. So with this situation we have here, I will be advising that anywhere below the 1,940 level seems most appropriate to secure this sell position. Let's give some room for price action to breathe. Now, with a secured position at this point, what is going to be our next line of action? One thing I would like to state here is that remember that demand zone around the 1,940, which has been a very strong buying niche in the last couple of weeks, has been broken to the downside. And for us, price below this area is a sign that we want to be in a sell position. However, we cannot just jump into such conclusions as we still need some confirmations to help us feel comfortable selling the XAUUSD. So the next thing I want to do right now is to identify a key level which we are going to be using to guide our trading activity for today. And the key level here will sit somewhere around the, let's say the 1,933 level. So we have it right here. 1,933 level. So we are going to be labeling this one. You want to mark this out on your chart. $1,933. So we want to mark this out on your chart. We want to be using this as a reference point to guide our trading activity. Now, if you go into the past year, you see that we had buy pressure around this area at one point. And right now, in the last couple of hours now, price action has been ranging around that 1,933 to further emphasize the importance of this confluence that we are in right now. So we will need some level of patience here to monitor how price action will be reacting to the zone to determine what our next line of action will be. And one thing I have noticed here is that we have been seeing some buy pressure, that is attempt by the buyers to take out the sellers and continue to the upside here. So it's very, very important that we remain patient at this point. Now, in order to have a better perspective into what is really going on around here, we want to scale down into a much more lower time frame to see things more clearly so that we can position ourselves appropriately to capture any move here. So let me bring this in a little bit so that we can see. Now we have something like this, which is looking more like a reversal pattern. And I'm seeing some buy pressure around this area, giving us signs that buyers are gradually accumulating some positions around this area. So I would like to label this one a temporary demand zone. It's a temporary one for now, as we're still within a strong bearish move. Temporary demand zone figured out here. And then I want to have a level. This is the lowest point price action has been for this week so far. So I want to give this a red color to emphasize its importance and differentiate it from the other structures. So that is the $1,929 level. You want to mark this out on your chart so that you can use it as a reference point. So we give this a red color too as well. So we have that level figured out here. So if we are going to be selling today on the XAUUSD, I would want to see a breakdown retest of this $1,929 area, taking out the demand zone. Hold on a second. What happened here? Let me give it a white color. So I wanted to take out this temporary demand zone. So if it takes out the temporary demand zone here, then I want to see this as a sign that sellers are still very strong in this market. So I'm waiting for a breakdown retest of the structure for me to join this bearish move to the downside. And I'll be with you in the comment section to give you updates if something otherwise happens here. Now, buying the XAUUSD at this point, I would want to see a breakout retest of this 1,933. And sincerely speaking, I will give you an update on this one. I want to still monitor and see some structures mature around this area before thinking of buying above this level. But if there is anything significant that comes up in the next couple of minutes or hours, I will let you know in the comment section on both my TradingView Telegram platform. So at this point, we are looking at selling pressure below the $1,929 area to maximize the bearish momentum in this market. So let's see how this plays out, and I'll be with you in the comment section to give you updates as at when due. If you have any questions regarding what I just explained, feel free to let me know in the comment section while I move on to the next instrument. And the next instrument on our watch list is the USDJPY. So on the USDJPY, we experienced some volatility here yesterday. And prior to the FOMC meeting, I was able to identify a simple setup that we were supposed to use to guide our trading activity. And one of this setup is this bullish trend line here, where price action has been respecting, though we had some couple of breakdown of that trend line at one point in time. And besides the trend line, we had a couple of key levels. So let's look at the USDJPY commentary on my TradingView platform and see how we were part of that move. And if you remembered yesterday, I shared on my Telegram platform, check my Telegram platform, I shared there in my notice that we should not close the buy orders on the USDJPY, the US oil, and the XAUUSD. It was for a reason, because I still think that the dollar could still do some sudden movements yesterday. And if you had left your buy orders on your USDJPY, you would have been profit right now. So on the sell position for the USDJPY prior to the NFP data, this was my position here that we identified. So we had a 139.900, we had a 140.150, where we are looking out for buying opportunity if price action breaks out of the 140.150. So we had a buy stop order at that point. We also had a buy stop order at the 140.300, and we also had a sell stop order below the 139.900 level. And we saw the breakdown of that level to the downside, and at this point we had our sell position triggered. Price action continued to the downside. I added another key level at the 139.550, where I said the breakdown retest of that structure will welcome more opportunities. And you can see we had a breakdown retest to maximize the bearish move. And at this point, I mentioned this here. I said if you are taken out of any of the existing position in our portfolio, probably due to your stop loss move too close to price action, then it's recommended that you refrain from opening any new positions here. So this morning I told us all that we have, okay, you can see if you had moved your stop loss or the sell position, you have been taken out on wholesale positions, and you saw how the buy stop order had a 140.150 and a 140.300 was triggered during the early hours of today to give us a whooping 225 pips profit on that two positions. So I told us all to secure all these positions while we remain vigilant for more opportunities here. So well done to everyone. So we were able to catch both moves yesterday. We caught the sell move and we caught also the buy move. So well done to you for being on standby to have caught that opportunities. So right now we are going back into the live chat to see how we intend to take advantage of trading opportunities today. So for those who are still in the buy position right now, it is reasonable at this juncture that you moved your stop losses to secure this current position. And the most appropriate area should be below the 141.00 level. Let's give room for price action to breed with the hopes that price will still continue to the upside. Now, with that being said here, with our positions well secured, the next thing we are going to be doing now is to try to anticipate what could happen during the London and New York session today. Now, one of the things that we have here is the fact that we had the zone here broken to the upside with a significant engulfing bullish candle. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that price will at one point go through profit-taking activity, which would reflect on the chart as a retracement back into that zone to incite another wave of bullish momentum. And if you look at that zone closely, you will see that it shares a confluence with that bullish trend line, which has been guiding this bullish momentum so far this week. So one of the scenarios we are going to be looking out for is the possibility that price action could retrace back into the zone that it was broken out of during the early hours of today to incite another wave of bullish momentum. So that is one scenario there. And the other situation that could happen here is for a consolidation phase to happen where price goes into a range forming a trend continuation pattern. It could be a bullish rectangle. It could be a flag pattern. It could be a rising wedge, a falling wedge, whichever case it may be. We look out for a breakout retest to join that bullish move to the upside. So these are the two ways we are going to be joining any bullish opportunity at this point. Now, to make things easier, we want to identify structures around this area. So we have one at a psychological level here at the 141.500. So we want to mark these levels out on our chart. 141.500 level, as you can see here, please at the top right hand side of our screen. Then we want to have the support line of this chart. Let me see if we can find something on our line chart. Okay, so we have something like this here. So this is 141.00 level, another psychological level we have there. So I place this at the bottom right hand side. So here we go. So we already have a channel to work with for today. So it's very simple. You know how we do it whenever we have this kind of structure. We want to have a buy stop order above the 141.500 to capture any bullish move to the upside there. And if price action breaks down the 141, then this might incite a retracement of the impulsive move we saw yesterday. So in this kind of situation here, if you are a counter trend trader or a scalper, you might want to take advantage of this bearish move at this point to join, to connect with the trend line here to incite the bullish move to the upside. And that will dovetail to about 80 pips thereabouts if price action moves in that direction. But if you are not a scalper and you are not a counter trend trader, I would just advise that you stay clear of the breakdown retest of the 141 level and just come here to wait to see how price action will be reacting to that 140.300 level, which also shares a confluence with a trend line to decide what our next line of action will be. So if price drops into the zone here and we start seeing buy pressure above this area, then we want to be looking out for a trend continuation to the upside. But if price action breaks down this 140.300 with sudden pressure below that level, then we want to be getting ready to sell at that point. So that is how we are going to be trading the USDJPY for today. So let's have our buy stop order above the 141.500, hoping that price action will continue to the upside. And for, like I said earlier, for those who are still in a buy position in this market, you want to be moving your stop losses to secure this current buy position. So that is what we are doing today on the USDJPY. So it has been an interesting 24 hours, and I hope that we extend this positive influence into the London and New York session today. And by tomorrow, we shall be coming back here again to review how well this instrument has been doing in the last 24 hours. And trust me, I'm always with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So do have a wonderful day, everyone. It has been a wonderful moment, and I hope to see you right in the comment section on my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.